screen as well. That's the profit figure. We're working with a bit of a revenue decline. That's the poll. Looking at a dollar revenue decline of about 1.5%. So let's see once that number flashes in. Our poll is at 1640 in terms of dollar million in on the revenue front. Right now we have the rupee revenue number. And obviously margins are the key watch point. The market is anticipating that there should be some sequential margin improvement. But of course, Tech Mahindra as a company is way behind some of its other peers like LTI, Mindtree, or even some of the others like HCL Tech in terms of the margin profile. And that has been the challenge which the new MD and CEO has been sort of, put up to look at, just improving the margin profile on a long-term basis, medium to long-term basis. So that is the revenue number. That's the rupee revenue for the time being. We should be getting the other numbers as well in a bit. That's Tech Mahindra still have only the profit numbers. 692 crores of profit. That's lower than the poll, but I think let's just wait for the rupee number to come in. Prakash Diwan and Mayuresh Joshi are with us as we're awaiting more numbers from Tech Mahindra. Gentlemen, hi, good afternoon, and thank you for dialing back in. Prakash, while we wait to get more granular details of Q1, what's your thought on just the way the business is shaped up on the telecom side? This whole talk about boosting margins. What's your overall view on the company and the stock?
Yeah, so I think in the absence of detailed numbers, that's the best we can do to align our thought process in terms of where the company is heading. And from that perspective, I think the new leadership changes that they've had, the kind of call for margin growth is very, reminiscent of the way HCL Tech did about 3-4 years back when they started focusing on more products and solutions and services. And that's exactly what Tech Mahindra is trying to do. It was always had a very well accepted, established presence and leadership in telecom as a vertical, but they could never use that to improve the margin profile. So that is something which is evident given the traction in the business, the explosive growth that India itself is offering apart from some other parts of the world. I think with 5G and 6G and those adaptations, there is no doubt there is enough headroom for growth. They will not have to succumb to the vagaries of a recessionary trend and all of that spend coming down. But we'll have to see the execution actually happening in that sense. So that's the only concern. But absolutely right for a re-rating or a reset, if not a re-rating yet of the growth from the numbers that you will see.
Okay, the revenue number is there, 1601, and that's a 4% sequential decline that's come in. That seems to be, a lot more than that was anticipated by the street. So yeah, we've got that down. So it is a revenue decline. Yeah.
Okay, all right. I think we'll get the management as well in just a bit to understand what's gone on in the past quarter. But Prakash, what would you be looking forward to? A softish quarter, but the way ahead, right? The key factors you'll be looking forward to?
The key metrics that you need to look at in this case is what have they done? See, revenue degrowth or pause is evident or is understandable, Nigel, because of the fact that they will start getting a bit more picky about the kind of businesses they want to go after. If they're chasing margins rather than just revenue. So we would love to hear what is it that they are foregoing and then what is it they're likely to get in terms of new contracts, new orders, which geographies are going to be adding to that particular thing. That will give you the longevity or visibility of the high margin growth that we anticipate. So I think these are the key areas that we need to hear the management on. And as I said, the transition is something which everybody has been waiting to see get in place. And that will also set the tone for the new business model to be executed properly.
I think forget the comparison to what was expected, but I think standalone purely as compared to what they delivered in the last quarter, this seems to be pretty challenging set of numbers on both the revenue and margins as well. I think out of the larger cap IT names that we've heard numbers from, I think this would be one which is perhaps at the poorer end of the spectrum, clearly. And by the way, there is some statements from the management acknowledging this as well. The CFO Rohit Anand The press release says the quarter was a challenging one for us as revenue growth faced strong headwinds and that had an impact on profitability. We've taken swift and decisive action to address these issues and improve our execution. Mayuresh has been waiting by. I think he's looked at numbers as well. Mayuresh, your thoughts? Telecom?
Prashant, very soft numbers, as you rightly pointed out. I think revenue growth or degrowth that has probably happened, softness in EBIT margins are a little bit worse off than what the street was probably anticipating and expecting. Two things that obviously act as triggers for them, but they have never really translated into numbers. The entire cloud penetration opportunity and the 5G opportunity, which is very, very huge, has not largely gone through because there has been delays in decision making. The management has made that very clear in the past 2 quarters as well. There have been some instances where the clients are relooking at budgets as well. And the legacy issue that they've probably got in terms of transition from legacy to digital, I think that is what is probably going to create some sort of a pain, along with wage hikes, which they're expected to take in a very constrained manner over the next couple of quarters. Again, I think the investments, Prashant, that they're expected to do in Japan and the Middle East, I think those accelerated investments will also have a say in terms of some degrowth that happens on numbers.
Yeah.
But
Mayuresh, no, absolutely. I just want to also point out that there is weakness across a lot of their key verticals, communications, media, and entertainment. It's declined 9.5% quarter on quarter. It's also declined year on year, 8% year on year. There's degrowth in BFSI, 3.2% decline quarter on quarter, 5.5% decline year on year. So the weakness pretty much persists. Manufacturing is the only sector, I mean, by industry, which has shown growth. A lot of their other big verticals are down, and in terms of geographies as well. North America has fallen, so has Europe. Europe is down 6.7% in the quarter gone by. That's what we have. So weak show from Tech Mahindra. Let's go across to the management to get more.
At Tech Mahindra, which is probably one of the smoothest and one of the best transformations that is happening. So thank you everybody for your support, and I'm happy that he's joining the first earning calls at TechM. I know it's not the best of the quarters we have had. I know the usual commentary that you all have heard, unprecedented times, uncertain times, impact of the war on Europe, supply chain disruptions, inflation. But the reality is that, there is a speed breaker right now, and it has influenced the industry. Decline in revenue, decline in profitability, and for Tech Mahindra also, it's one of those quarters where we are trying to balance huge initiatives on internal transformation and some of the external factors. On the internal transformation, you all know that your company has invested a lot on the artificial intelligence, a lot on the AI platforms. We have doubled our efforts on cloud, data, and the 5G solutions. We have done reasonably well on the metaverse, blockchain, Web 3.0. We'll continue to focus on the leading technologies. And I do know that currently in this quarter, we are seeing a little bit of a slowdown, but overall, your company's investment will continue to help us becoming better in the top quadrant of all analyst reports. Right now, we are clearly in the top quadrant in about 36 reports, but my belief is we can do even better. Similarly, your company launched a global chess league. I think it was more to demonstrate our association with knowledge, our association with creativity and innovation, and that global chess league, which was the maiden event this year, has worked out very, very well. I mean, our overall connect with the audience, overall about 22 broadcasters covering it globally. Our, the whole tournament proving that the world is all about hybrid, physical and digital, online and offline. And I think we brought in technology to the heart of the Global Chess League, and Tech Mahindra is proud that we started that Global Chess League. Overall, I can say that the focus this quarter has been adding a generative AI studio. We are clearly committed to not only the new changes in the generative AI, but the opportunities that it brings to the table. Technology meeting the domain and solutions becoming more important and the speed of execution becoming more important. So the company continues to not only invest, but we are also upskilling. So this year, rather this quarter, we have upskilled about 8,000 associates in generative AI. We are working with some of the leading technology players in partnership. We have announced few of our solutions with our leading partners. And all I can say is that from my perspective, networks, generative AI, cloud, cybersecurity will continue to define the way we build the company. I know I have already shared with you, it was a tough quarter. Revenues are down 4% sequentially. A major part of it was because of the drop and the headwinds in the CME business.
Okay, that's Tech Mahindra. The market will have a lot to react to tomorrow morning. But for now, it is a wrap from the entire team that puts the show together. Thank you very much for being with us. But do stay tuned because news and updates continue right here on CNBC-TV18.